All right, so hopefully you guys see that part. Now, when you're looking at your risk to reward, this is a daily time frame. Hopefully in your plan, you have identified how much you want to risk. So let me just start out and create a, let's say, an imaginary account. We're going to just use $1,000 account size. All right. And you can create your risk amount. Remember, in the risk to reward training, we say, you have to write it down. You have to have a plan on what you're willing to risk every day. So if your plan says, I'm only going to risk 3% of my account every day, then you can do it that way. 3% daily is your max. Okay, now that's whatever. We say 1 to 3% on each trade or what have you. So however you want to set that up. But this is just a guide, okay? So it could be 1 to 3% per trade that you're risking. It could be that you're just going to risk a total of 3% per day. So if you're risking 3% per day, right? And let's say you just trade one pair. That means you could make 3 trades that day, and this is just hypothetical, and you can risk 1% per trade. Does that make sense? I'm just keeping this, oops, I'm just keeping this real simple, because you have to have a limit. You can't just, you can't just go into trades and not understand when to stop. Okay, so that's why I like the risk to reward, because it tells you, like, oops, I'm at my 3%, it hit my stop loss, I'm done until tomorrow. It's got to be real structured, or else you guys are just going to be chasing trades and trying to over trade, and dwindle away your account. Okay, we don't want that. So it's got to be some structure to it. So this is just an example. You could say you only want to risk 2% per day. You can also do it in pips. So let's say you say, okay, I'm gonna only risk a total of 40 pips per day. Okay, and you could break it up. Let me put here risk 40 pips per day. And then you could also, say, okay, that means I could take 4 trades. Oops, why I keep doing that? Four trades and risk 10 pips. Now this would be like more of if you're scalping, because if you're just risking 10 pips, that's a pretty small setup. Okay, 4 trades risking. You guys follow me, right? These are just examples of how you can do your risk for the day. You could also do it for the week. I mean, this is, we kind of outline that in training, but if you want to do it for the week and say you have $1,000 account, or wherever your account size is at that particular time, you can have $887. Okay, so whatever that is. So let me pull up my calculator. Let's say your account right now, because your account is going to change as you start trading, right? And I'll show you guys a tool in a second. But let's say your account starting right now, Sunday, is $887. Okay, so you're going to say, okay, this week I'm only going to risk a total of 5. Let's just say 5% for the week. Okay, so that might be equate to what? If we have 5 trading days, it'll be 1% a day, right? So let's just say, figure out what that is. So you times it by 5%. So that's $44. Okay, so once you reach that max, if you are knowing what you're going to risk, all right, your account's at $887 or whatever that number was, and you're only willing to risk 5% this week. Then once you hit that $44.35, you're done. Okay, it could be, hopefully you spread it out, but if you are taking too many trades, you're going to reach that limit sooner than later.